Every time that I've stood up here in the last 3 years, we've talked about this debate is going to go on for a long time. Greece will eventually not stay in the Union. They will have to leave. The math does not work out. Same might be true for Italy. We have a whole nother, we talked about this 6 months ago and a year ago. France has massive problems. I mean, Europe is still a disaster. You know, Draghi said we'll do whatever it takes. They don't have the power to do whatever it takes. And Merkel has been, you know, seriously austerity for everybody for this entire period. And she's got a lot of support of the German economy, but there's people that run big companies in Germany that export to other parts of Europe that are losing business because of that austerity measures that's being applied to those other places. It doesn't change it doesn't change the conversation, right? The issue is huge unbalanced economies between Southern Europe and Northern Europe. And that problem cannot be fixed with just a monetary union. It has to be repaired with either fiscal union, which means countries may have to leave and return. So this game continues to play out and will continue to play out for quite some time. The interesting thing is, every time an issue flares up, it gets put back down. And every time we do that, markets get stronger, and Greece gets another bailout, and Ireland gets another bailout, and Cyprus gets another bailout. And eventually, enough bailouts, if we do them correctly, they will be able to grow again. But it requires, and this is the point earlier, it requires growth.
Can you get over that bond issue that you just talked about, though?
You can't get over the bond issue without forgiveness. Greece will never, ever be able to pay. I got to push forward. I'm getting the hook here. QE34, everyone know who this is right here? Well, yeah, that's Bernanke, but you know who this is? This is, okay, QE Infinity and Beyond. No? Buzz Lightyear, all right, Buzz Lightyear. So this is, this is basically what we're doing. This is what we did first. We drove Fed funds to zero. It'll be there for a long time. There are projections, or the Fed says we're going to raise rates in 2015. There's projections by other people that look at the Taylor rule, some other things that say 2016 and beyond. So we probably have cheap capital, borrowing capacity for homeowners, for everyone for a long time. At the same time, so this is the short rate, right? This is the Fed funds rate. This is the Fed balance sheet. Started at 750 million here. It is now at about 3 trillion. And this is not the deficit. This is just the Fed purchasing 40 and 45 trillion of treasuries, long-dated treasuries, and mortgage-backed securities. So remember we asked moments ago, and we'll see a slide about this in just a second, about what the most successful sector was this year. Banks, financials. So well, Greece was the best market, but sector in the United States was financials. So the reason financials are so incredibly powerful is because they are lending and selling to the final buyer, which is the Fed. They're lending based on the rules the Fed writes, and they're selling $45 trillion a month, right? And the Fed has said, we're going to keep buying, we're going to keep buying, we're going to keep buying. So the Fed's balance sheet is growing. The banks are taking fees for this, and they're actually taking a discount when they sell it to the Fed. So they make money from us when we refinance and when they sell it to the Fed. So the Fed is actually reflating banking system. Make sense? Does everyone see how that works? Okay. And then we have China. So this right here is the estimate for 12. This is 13. And you can kind of see for the last 3 years, China's GDP has declined. And this is an estimate. So that may not come the way you expect it. But this is China for the year. You see a little trend here, but this is December. So what happened? There's a massive leadership change. And China is now trying to make the transition from an exporting economy to a domestic consumption economy. What are we? We are a domestic consumption economy. We are 70% consumer driven. And so when you look at, and this, we don't have this chart here, but when you look at a chart of the importance of exports to an economy, they almost, I mean, they're important to us, but as a percentage, they're not that important. In China, incredibly important. And so the new Chinese leadership is saying, what we're going to do is we're going to transition from that export economy to a domestic consumption economy. Right now, they're 90-10. I'm making numbers up. They're vastly in the camp of exportation. If they change that a little bit, right? They boost that with earnings inside the country, and those people can start buying stuff, iPhones produced in China for the Chinese people, right? So these are the kinds of things that we're going to see. Think about the effect that has on the global economy. When it won't be all, there'll always be tremendous poverty in China. It's a huge country. So the question is, what do I mean by the transition from an export economy to a consumption economy? So right now, China's GDP is almost entirely exportation, right? They have a big chunk that is government spending, which is infrastructure, but the vast majority is exportation.
Well, the implication is that our production is going to have to start going back up.
So you hear that? The implication is that our production will have to go back up. And I would say that's already started. That's already happened, okay? There's other implications. We'll talk about those in a sec. Here we have Western Digital, GE, Citigroup, IBM, JP Morgan, Wells Fargo, Goldman Sachs, AIG, Bank of America, and Apple. Those 10 companies were 90% of the earnings growth for the S&P 500 in 2012. So if you take those 10 companies out, which you can see, right? GE is entirely because of GE Capital. Citigroup, JP Morgan, Wells Fargo, Goldman Sachs, AIG, Bank of America. It's the financial sector. So if you were underexposed to the financial sector this year, you underperformed, period. There was no way to have a good, a market performance if you were not exposed to financials. The interesting thing to that, for me, is, was it really a good market then? 16%, but was it a good market? If the average earnings numbers, and you think about how many people are invested in the S&P index, tons and tons and tons of money are in the S&P index. And if 10 companies is all of the earnings growth, what does that mean for next year, for this year?
Scary.
Yeah. Housing. So all of the media that talks about the recovery in housing is talking about this little thing right here. Right? It's a 20% growth year over year, but that's all we got. So the question is, if it stalls out, it almost doesn't matter. Is it likely to go back down? It's not really likely to go back down, and the reason is, if you think about the number of households that started that don't have homes, in the last 5 years, we figured, I think the run rate is you need to have 1.5 million new homes built every year. For 5 years, we haven't built any. And that's what this is. That's inventory. 4 million homes all the way to 2 million homes. So the inventory available on the market has come down. And if you talk to real estate agents anywhere, they're saying the market is picking up. So we have John's wife is a real estate agent. And so we get a little bit of reports every now and then when John comes in, and everything is busy. There's nothing on the market, and it's very regionally based. So what else does that mean? We talked about jobs. We talked about the need to build homes, creating jobs. The interesting thing about that, because you can't, if there's a place that's growing and there's not enough homes in that place, we have to build homes in that place. So North Dakota, where there's a ton of energy, fracking, and all the bad stuff that goes with that, but the energy thing, the growth is there, no question. The homes are not. There's people living in mobile homes, there's people living in tents, so they're building there, and that is a huge growth spurt, and that will keep going. Growth there's growth in Texas, anywhere there's energy, Wyoming, tons of growth in those places. Any place you can find energy. That spins off other growth, more building, more construction for offices. So housing, I think, is stabilized, and the question is, where does it go from here? It's likely that we see building, we see jobs from building, and we see housing continue to go up, but when you see the statistic is 10%, 20%, that can't continue that way. So don't rely on that. Just realize it's stable, and that's what we need. It's tough to get injured falling out of a basement window. So even if it comes down a little bit, it's not gonna hurt the economy that much. Okay. So we still have this. So these 4 lines are different levels of education. And they're showing us the unemployment rate for those different levels of education. So here, you can kind of see we saw a little uptick from 2 to 4.5, maybe 5, for people that have college degrees. Here, we saw an uptick from 8 to 16 for people that don't even have high school diplomas. Okay, so that's where the problem lies. Education is so critical. At the same time, so unemployment is declining, but that number is just as much due to people giving up as it is to people finding jobs. We don't have a fast enough job creation engine yet. We hope it's coming, it's not here yet. And this is what that causes. So this is food stamps, year by year. So we are at an all-time record for food stamps. So just realize that when you go to bed at night and you put your head down, say your gratitude and your thanks.